We're going to start chapter 15. This is the most technical chapter of this paper, bank reconciliation. Because more than half students find this chapter a little bit tricky because it's something different than rest of the chapters. So let's see how we can cover this either easily, either a little bit difficult way. Let's see. So chapter 15 is about bank reconciliation. What is bank reconciliation? Let's cover. Suppose you are working as an accountant in an organization. So you are the accountant. Being accountant, what you need to do, you need to maintain cash book of the company. What you need to do? Cash book of the company. What is cash book? Cash book is a ledger of cash. Every ledger is having a debit side as well as credit side. So cash book is also having a debit side as well as a credit side. On debit side, what you record receipt of cash. And on credit side, what you record payments of cash. Suppose in a business, we received amount from customer called ABC. What will be the amount we will record on the debit side? We have received some amount from a customer PQR. So we will record that amount on the debit side. And payment, normally we pay to suppliers, to creditors. Suppose we have paid some amounts to a supplier XYZ. So we will record on the credit side. Simple. Mean cash book is a cash ledger. On debit side, we record cash receipts. Normally we receive cash from the customers. And on credit side, we record payments, payment to suppliers, payments to employees, payments for expenses. And at the end of month, what we will do, we will sum up this ledger. As cash is an asset, so normally the balancing figure will come over here. That we will call it balance carried forward. And this will be transferred to here as a balance brought down for the next period cash book. So can you understand this concept? In this book,
Oh, yes, sir.
will show how much we are having balance at our bank account. Mean through cash book, we will able to identify how much cash should be there in our bank account as per our calculation. We are preparing this cash book in our business. Like every receipt, we are recording on the debit side, every payment we are recording on the credit side, and at the month end, we are balancing this. This means we have obtained this debit balance. This means we are expecting this amount should be in our bank account as per our calculation. Mean this cash book is showing what is the balance in our bank account as per our calculation. What bank do? Bank prepare a passbook, or you can say bank statement regarding our bank account. Mean this passbook or bank statement is provided by the bank. Is provided by the bank, which shows actual balance in our bank account. And the balance of passbook could be different than our balance of cash book. Because cash book is showing how much should be the balance in our bank account as per our calculation. But bank statement or passbook that is prepared by the bank, that is showing your actual balance in your bank account, which might be different from the balance of cash book. Why there is a difference, we're gonna discuss now. The passbook balance, bank statement balance could be different from the balance of cash book. Why there will be a difference, that's we're gonna discuss now. Suppose we have prepared our cash book and we know and there is a passbook. Suppose if any deposit has made to our bank account, so 5,000 has been deposited into our bank account, we will record on the debit side of cash book. Deposit mean we have received this 5,000. There could be some entries in passbook that we are not aware of it. Like suppose bank has made some bank charges from our account, say of 200. And these bank charges, bank have collected from our account silently and they haven't informed us. So this is the one reason that there is an entry in a bank statement, but not recorded in cash book. Because if they haven't informed us, obviously we haven't recorded in the cash book. Some of our customer promised us, okay, I will pay you amount in future. And he has deposited, say 1,000 into our bank account and didn't inform to us. This means we are not aware of this, but there is an entry addition in our passbook that might not be recorded into cash book because he didn't inform us. Can you understand this?
Oh, yes, sir.
This means what we need to do every month, we need to compare our cash book with passbook. And to make sure if there are any entries in passbook but not in cash book, we need to record in the cash book. There might be some entries in our cash book that has not been recorded into passbook. Suppose we need to pay a supplier, say 2,000 pound, and we paid him through check. This means we paid 2,000 through check. We recorded in the cash book 2,000 payment. But he didn't deposit the check to the bank till now. He is still having that check in his pocket. He didn't deposit the check till now. He haven't deposited the check till now. He is keeping the check in his pocket. This means this 2,000 has been recorded in cash book as payment, but this 2,000 is not there in the passbook. So due to this, our cash book and passbook balance could be different. So can you understand this? Why passbook and cash book balance could become different? Could become different due to bank have collected some charges from our account, but we are not aware of it. They are not recorded in cash book. Our customer silently deposited some money into our bank account because he promised few days back, okay, I will pay you within a month. And he deposited into the bank and didn't inform us. He might be expecting we will be aware of it through our bank statement. So these are not recorded in cash book. So there could be a difference between cash book and passbook. Or we have paid a payment through check to a party and they didn't presented the check to our bank. This is called unpresented check. What this will call? Unpresented check.
Presented check.
Mean we paid a check to a party, but they haven't presented the check till now to the bank. This means we have recorded in the cash book payment of 2000. But in bank, in passbook, that check has not been recorded because till now it's not presented to the bank. Bank will record when the check will be presented to the bank. Then bank will deduct from our account. So what we need to do being accountant, we need to match this passbook or bank statement with our cash book on monthly basis, so that we can rectify this balance. The balance what we are expecting is in our bank account. We should be aware of it. What is the actual balance? Suppose we are expecting in our bank account, we are having 100,000. While our passbook is showing we are having 90,000 in bank account. And suppose we need to pay some payment of 98,000 to a party. We have given him a check of 98,000. And when he presented the check to the bank, what the bank is saying, we are not having 98,000, we are having 90,000. So there will be a difference of 8,000. Due to that, that check might become dishonored, might returned by the bank. And the party will not be able to collect 98,000 from the bank. So that's why we need to make sure how much balance is in our book. It should be similar to the balance actual in the bank. So for that purpose, we need to compare cash book with passbook. And comparing cash book with passbook is called bank reconciliation. Is that fine? Can you understand what is bank reconciliation and why we need to do this?
Yes, sir.
Okay, now we are moving towards the bank reconciliation concept. I mean, how we can reconcile, how we can prepare bank reconciliation. Suppose. So we have identified there could be differences between cash book and passbook. There could be differences between cash book and passbook. These differences could be due to two reasons. What could be the reasons for differences? Either these differences are due to our mistake or due to not our mistake. So the difference between passbook and cash book could be due to our mistake or not our mistake. What could be the difference where we are not mistaken? What could be the difference where we are not mistaken? We have paid a party through check. We recorded the amount as payment in cash book. But that party is still keeping the check in his pocket. This means this amount has not been recorded into bank yet because he haven't presented the check to the bank. So there will be a difference between cash book and passbook due to unpresented check. Due to unpresented check.
Unpresented check.
So there could be a difference due to unpresented check. Is that our mistake?
No, sir.
No, it's not our mistake. So due to this, there will be a difference. This means if he haven't presented the check to the bank for this month, either we are having a benefit or loss. Either we are having benefit or loss. If we haven't presented the check to the bank, either we are having benefit or loss for this month only. The amount has
Sure.
not been deducted from our bank
So
account.
we will have profit, not loss.
We are having a benefit
Yes, sir.
because
Benefit.
we are still having money in our bank account.
Oh, yes, sir.
That has not been deducted yet. Mean we are still having money in our bank account.
Yes, sir.
So we will call it a benefit. One more example. We received a check. We received a check from a customer. We received a check from our customer. We deposit into the bank. But that check has not been cleared yet. Because might be the check is post dated. Post dated means the date on the check is of next month. That will be called uncredited check. What it will be called? Uncredited check, mean deposited but not credited. Deposited but not credited. Why it is called uncredited? We're gonna discuss it now. So we receive a check from a customer. We record it as a receipt in the cash book, debit side, and we deposited the check to the bank. But in bank, that amount has not been collected into our account because the check date is too far, mean is relating to next month. In next month, when the date will come, the check will be clear and amount will be deposited into our bank account. Is that our mistake? No, this is not our mistake.
Oh, no, sir.
Because sometime we deposit the check today into the bank account, bank need 2 to 3 days to receive the payment from other bank account to our account. So it could be like uncredited check because normally bank need 2 to 3 days. If the check is of a different bank account, so bank need normally 2 to 3 days to collect the money from a different bank account and then transfer to our bank account. So this will be called uncredited check. And due to this uncredited checks, either we are having benefit or loss.
Benefit.
How benefit? We received a payment, we recorded in cash with, mean we are expecting this balance is in our bank account, but
Okay,
this
no,
balance
it's
is not in
loss.
our bank account.
So it will
So
be
this
loss.
will be called a loss. These terms are important for bank reconciliation because we will complete our bank reconciliation by considering benefit or loss. Sometime what happens? Due to mistake of bank, the check of any other party, any other person has been deposited into our bank account, not by ourselves, by the bank. Obviously, if it has been deposited into our bank account, the next 1 or 2 day bank will rectify that, mean this will be deducted from our bank account. But still, today, that payment is in our bank account. That is due to mistake of bank. So this is not our mistake. Mean what could be not our mistake regarding unpresented checks? Regarding uncredited checks, mean check deposited but not cleared by the bank, other bank. Or there could be some entries in our bank account due to bank mistakes, which are very rare. But it could happen. So why there is a difference between passbook and cash book? There will be 2 reasons: our mistake or not our mistake. What are the not our mistakes? Unpresented checks, uncredited checks, or mistake of bank. Except these 3, the rest all will be our mistake. except these three, the rest all will be our mistake. Can you understand this?
Oh, yes, sir.
Okay, let's move forward a little bit more. We know cash book balance could be either debit or credit. If cash book is having a positive balance, this means this is a debit balance. Mean if anything is adding to our cash book, mean receipts are positive, this means this will be debit to cash book, and negative balances, negative mean any payments will be credited to the cash book. Is that fine?
Oh, yes,
So
sir.
any positive things happen in cash book mean addition will be debited to the cash book, and any negative thing happening mean any
Credited.
payments will be credited to the cash book. If cash book is having a debit balance, positive balance, that will be debit. If cash book is having a negative balance, that will be credit. In passbook, the things are in reverse nature. Like any positive balance of passbook will be negative balance, and any negative balance in passbook will be considered debit balance. Like receipts will be debited to cash book, but receipts will be credited in the passbook. Receipts will be debited to cash book, but in passbook, this will be recorded on credit side. Mean if our cash book is having a positive balance, debit balance, the passbook will be showing the same balance as a net credit balance. Mean in cash book debit, in passbook the similar balance will be credit.
Credit.
Because passbook work in reverse order as compared to cash book. Suppose we are having cash book in a cash book, we are having 100 positive balance. This will be shown on debit side of cash book, but in passbook, this will be shown on credit side. Mean receipts, normally we record on debit side of cash book, but the receipts mean deposit into our account will be reflected on credit side of passbook. Mean passbook work in reverse order. Payments in cash book we record as credit, but payments in passbook will be recorded on debit side. What is positive? Positive mean receipts. What is negative? Negative mean payments. While in passbook, the receipts will be shown on credit side. The payments will be shown on debit side. You need to mention this at the start of this chapter. This is the point where student got confusion. Cash book, positive balance is debit, negative balance is credit. Positive accounts debit, negative accounts credit. While in passbook, the things will go in reverse order. Positive mean credit, negative mean debit. Shall we move forward? So we have
Oh, yes, sir.
discussed the difference between passbook and cash book could be due to two reasons, due to our mistake or due to not our mistake. Now we are moving towards preparing bank reconciliation, mean how we can perform bank reconciliation. Whenever we receive a bank reconciliation question, we need to prepare for our mistake, cash book, if the issue difference is relating to our mistake, this means we need to correct our book. What is our book? Cash book. If the difference is due to not our mistake, that could be relating to unpresented, uncredited checks or any errors by the bank, then we will record in passbook. The cash book having a debit balance as brought down, we will record here. If cash book is having a credit balance, we will record balance brought down on this side. But normally cash book balance is debit. The benefits we will record on the debit side of cash book, and the losses we will record on the credit side of cash book. Benefits we will record on the debit side of cash book, and the losses we will record on credit side of cash book. Means through entry we will create this concept whether due to this mistake we are having benefit in current month, we will record on the debit side. Whether we are having a loss due to this difference, we will record on the credit side. Then what we need to do, we need to balance the cash book. If balancing figure coming here, we will call it balance carried down, and this is a debit balance of cash book. If balancing figure is coming here on this side, this will be a credit balance of cash. If the difference is due to our mistake, what will be the our mistake? Except these three reasons, the difference will be due to our mistake. In that case, we need to record in the cash book. We need to adjust the cash book. If due to that entry, due to that reason, due to that difference, we are having benefit, we record on the debit side. If we are having a loss due to that difference, we will record on the credit side of cash book. But if the difference is not due to our mistake, then we don't need to adjust cash book, we need to adjust passbook. How we can adjust passbook? For passbook, we need to prepare passbook. First, we need to record a balance as per passbook. Balance as per passbook. Either it could be positive balance or negative balance. And in passbook, positive balance mean credit balance, negative balance mean debit balance. In cash book, positive mean debit, negative mean credit. Well, in passbook, positive balance mean credit balance, negative balance means debit balance. In passbook, what we need to do, the benefits like unpresented checks, we need to deduct. Normally benefits are positive, but relating to passbook, the benefits will be considered as negative and the loss will be considered as positive. Mean reversal of cash book. And then we will be able to find the balance, revised balance as per revised balance as per cash book. And this balance and this balance should be the same. Can you understand this?
So in the end, the balance has to be same in both.
In both, the cash book balance should be the same with the passbook. Why it should be same? Because we are performing bank reconciliation.
Yes, sir.
When we are performing bank reconciliation, when the cash book and passbook balance is not same.
Yes, sir.
So it could be due to reasons. Reason could be our mistake or not our mistake.
Not
If
our
it is
mistake.
our mistake, we will adjust in the cash book.
Or in the
If it is
passbook.
not our mistake, we will make adjustment in the passbook.
Passbook. Yes, sir.
In the cash book, the difference relating to our benefit will be recorded on debit side. The difference relating to our loss in the current month will be recorded as loss.
Okay.
While in passbook, the benefits will be recorded as a negative and the loss will be recorded as positive, because in passbook, everything go in reverse order as compared to cash.
Yes, sir.
Is that fine?
Oh, yes, sir.
We have done with this chapter now. Now we are moving towards questions. Just we need to keep in mind the benefits and the loss. Benefit mean happy feeling. Loss mean sad feeling. So in cash book, the benefit will be recorded on debit side, loss will be recorded on credit side. I mean, due to that difference, either we are having benefit in current month or we are having loss in current. Like due to unpresented checks, we were having benefits. Why? Because that amount is still in our bank account. Customer haven't withdraw from the bank. But for uncredited checks, we received the payment. We recorded in the cash book, deposited check to the bank, but it's not cleared from other bank. Means still the money has not come to our bank account. This means this is our loss. And these three items are relating to mistake not on our end. Except these three, whatever will be the difference, that will be relating to our mistake. For that, we need to adjust cash book. Is that fine?
Oh, yes, sir.
Let's move directly towards questions. Test your understanding one. On which side of the cash book should the following uncorrected items be posted? Either debit or credit. Bank charges, where we should record them in the cash book. Is our benefit or loss?
It's a loss, so it will
Should be
be.
recorded on credit side.
Yes, sir.
Direct debit standing orders. What is meant by direct debit or standing orders? Mean our bank account has been debited.
Okay.
What could be debited in the bank account? Payments or receipts?
Debited in our bank account.
Yeah,
Sir, receipts.
receipts credited, positive, payments negative, debited.
Okay.
Receipts are positive, you know. So they
Oh, yes, sir.
will be recorded as credit in the bank.
Yes, sir.
And payments negative, they will be recorded as debit in the bank.
Okay.
So what is standing order? Like for our routine bills, we have requested our bank, please pay this company on monthly basis, this fixed amount from my bank account. Mean you don't need to pay on monthly basis, the bank will automatically pay to that company. Like for our internet connection, the bill is fixed monthly. Suppose the bill is $100 per month. Instead,
Okay.
every month we are paying from our bank $100. We have requested our bank, mean we have arranged a standing order with our bank account that every first of every month, 100,000 should be paid from our bank account to that internet company. And bank will automatically pay to that internet company without informing us from our bank account on 1st of every month. That is called standing order. This means the payment is going from our account. Mean payment has been deducted from our account. Is that our benefit or loss?
Loss.
Loss should be credited to the cash
Credit.
book
Yes, sir.
because it has been debited to the passbook. You know, the things debit on passbook should be on
Credited
credit
in
of cash book.
cash book. Yes, sir.
Direct credits mean a
Debit.
customer has a deposited amount or into our bank account. Meaning in bank, in passbook, our bank account, the deposits will be credited and withdrawals mean money going out of our account will be debited. So what is this? Direct credit mean money has entered into our bank account by a customer and he didn't inform us. So what we need to do in the cash book, whether we should record on debit side or credit side?
Debit, sir.
Debit side, yes. Dishonored check received from customers. Dishonored check received from customers. Mean we
Dishonored check.
received a check from the customer. We present it to the bank, but it has been dishonored.
So on the credit side,
It should be recorded on the credit side of cash book because when we received, we have recorded on the debit side. Now
Yes,
we
sir.
need to record it on the credit side. Bank interest received. Mean we receive interest from the bank. Mean
So
if we have received, it should be credited to passbook, but should be recorded as
debit in the
debit
cash
to-
book.
debit to the cash book.
Oh, yes, sir.
Is that fine?
Oh, yes, sir.
Okay. Why there will be difference between passbook and cash book due to timing differences? Timing differences mean the customer is still keeping the check in his pocket. Mean in current month he haven't deposited to the bank. In next month he will deposit to the bank. So this means for the current month we are having benefit due to timing differences. We received a check recorded in cash book, deposited to the bank, but not still cleared from other bank. Will be cleared in next month because bank need 2 to 5 days for clearing from other banks. So this difference is either due to timing difference. Mistakenly, bank has deposited some else amount into our account. Obviously, in 1 to 2 days, bank will adjust our bank account for that. Mean will deposit to the real person account. So this could be due to timing differences. Mean why the mistake is not our end due to timing differences. And this he has shown. Mean if the difference is due to not our mistake, we need to adjust in the bank statement rather than cash book. How we gonna adjust? Mean we need to write down the balance positive. And then what we need to do, we need to deduct a benefit, we need to add losses, and then we will be having a revised balance as per cash book that we have discussed here. We have discussed. Previous we have discussed. Errors in cash book, errors in bank statement, don't need to read this, just move towards questions. And this is the balance, how we can adjust cash book mean balance. And then we record benefits on debit side, losses on credit side, and then we will be having a balancing figure like either here, either here. Test your understanding too. Test your understanding too. What we need to do? Which of these items will require an entry in the cash book? mean, we need to identify whether it is our mistake or not our mistake. Obviously, if it is our mistake, we need to adjust in the cash book.
In the cash book, yes, sir.
In preparing an entity's bank reconciliation statement, the accountant finds that the following items are causing a difference between the cash balance and bank statement balance. We need to identify which entries should be adjusted in cash book, which are relating to our mistake. Obviously, those three are not our mistake: unpresented, uncredited, and bank errors. Other would be our mistake. What are the options we are having? 346, 135, 124, and 256. This means we need to read the first adjustment. If it is relating to cash book, this means our answer will be either B or C.
Oh, yes, sir.
Because one is not in A and D.
A and D.
Okay, so direct debit 530 mean debit in our bank account. When we are aware of debit or credit, this means it is relating to bank.
Yes, sir.
So if there is a direct debit in our bank account, direct debit, how withdrawal from our bank account, this means is that unpresented, uncredited? No. Is that bank error? No. So this should be recorded in our cash book, because this is our mistake. If there is a direct debit, we need to record
yes, sir.
credit in the cash book. This means our answer
Will be
should
between
be
B and
either
C.
from B and C. A and D will not be there.
Oh, yes, sir.
If the 2 is the also relating to cash book, then the answer will be C, not B.
Yes, sir.
What is 2? Lodgements not credited 1200. Lodgements not credited rupees 1200. Lodgements not credited mean we have recorded a debit in cash book, but it is not credited to our passbook.
So it's not it will not be in the.
It will not be. Lodgements not credited.
Yes,
1200 mean not credited to our bank statement 1200. It could be we received a check from a customer, we deposited in our bank account, but not
Yes, sir.
cleared in the account.
So it's not in the options.
It's not our mistake.
Yes, sir. So it's not the
Check
correct
paid
one.
in by the entity and dishonored.
It is, sir.
It is relating to our.
Yes, sir.
Outstanding checks. Outstanding checks mean
checks.
unpresented checks. It is not our mistake.
Yes, sir. Not our mistake.
Bank charges, yes, that we
Yes,
need
sir.
to record in here. Error by bank, no, it's not our
No,
mistake. So
It is written only error by
135, what's
bank.
the option? Is there any option 135?
Option B,
Option B, yes.
or we can say option B because 2 was not in the relating to.
2 was not there, even the 4 was not there. Unpresented
sir.
checks. What is 4?
So automatically.
Unpresented checks.
Yes, sir.
Unpresented checks, also called outstanding checks.
Okay.
Unpresented mean customer haven't appeared in the bank. Customer haven't, the party to whom we have paid the check, they haven't appeared in the bank. They haven't deposited the check into the bank.
Yes,
That
sir.
is unpresented or outstanding checks. Okay, now moving towards test your understanding 3. A bigger question. Before test your understanding 3, we should cover test your understanding 4. So let's discuss test your understanding 4 first, then we will move towards test your understanding 3. What is test your understanding 4? What is the balance? What balance is shown on the bank statement at 31st December? We need to identify what balance should be there in the bank statement at 31st December. What's the question? The following is a summary of Adding's cash book as presented to you for the month of December 20x6. Receipts 1469. Balance brought forward on credit side 761. Payments 1262 and balance carried down 554. This means this will be the balance here as brought down 554. You know. So
Yes,
this
sir.
is the cash book balance at start of December. This means our cash book will start from this balance as a balance brought down 554. You know, we'll start from this balance brought down
Yes, sir.
554, and we need to prepare bank reconciliation. In bank reconciliation, we know we need to record balance as per bank statement, and then we need to add or less, and then we will arrive at a balance. And then we will arrive at balance. But we need to adjust these entries. Let's see. So all receipts and are bank and payments made by check. Upon investigation, you discover bank charges of 136 entered on the bank statement had not been entered in the cash book. Is that our mistake or not our mistake? Bank
It's our
charges.
mistake.
Our mistake. This means we need to record this into the cash book. How much? 136.
Yes, sir.
Where
136.
on credit side of cash book as bank charges.
Yes, sir. Credit side.
How much? 136.
136.
Number one. Number two, customer drawn amounting to 267 had not been presented to bank for payment with unpresented check. Unpresented check. Is that our mistake or not our mistake?
It's our mistake.
Unpresented check.
Yes. Oh, sorry. It's not our mistake.
It's not our mistake because there were three items that are relating to not our mistake: unpresented checks, uncredited checks, and bank errors. So this
Yes.
is not our mistake. Due to this, we are having benefit or loss.
We are having benefit because
Benefit. So benefit we deduct from the passbook.
Yes, sir.
Yes. So 267 should be deducted from the passbook unpresented checks. And this should not be recorded in cash book. So 2 is also done. So 1 done, 2 done, 3. A check for 22 had been entered as a receipt in cash book instead of as a payment. We need to record 22 here, but we recorded 22 here. Is that our mistake or not our mistake?
Sir, I don't think so. It's
in cash book, we need to record 22
okay, in cash.
payments.
Yes, sir.
But we recorded 22 receipts.
So it's our mistake. We need to rectify.
It's our mistake with 22. This means we need to rectify it.
Yes, sir.
How we can rectify it?
So first we need to subtract like 22 and then add like.
This means
like
we need
have
to
to add
record 44 here as payment.
Oh, yes, sir. Because yes, sir. 44.
The first 22 will cancel the effect. And the other
Yes, sir,
22 will record the exact what
yes, sir.
should be there.
It will, yes, sir.
A check drawn for 6 has been incorrectly entered in the cash book as 66.
It's our mistake. Yes, sir.
It's our mistake. Mean we
Yes.
have paid a check for 6.
6.
Instead of writing 6 here, we recorded 66.
So we will like debit 60.
We will debit 60 exactly.
Okay.
How this is calculated 66 minus 6.
Yes, sir.
So all four done.
Yes, sir.
Now we need to check what's the balance of cash book. What's the total? 734.
136.
734. Here is a balancing figure. And
Yes,
that
sir.
is
734. 674.
674 balance carried down, and this will come here as balance brought down. 674 is that positive balance or negative balance?
Can you repeat, sir?
This 674 is the balance of cash book. Is
Yes,
that
sir.
positive balance or negative balance?
Sir, it's negative balance.
Because on credit side of cash book. This means this 674 negative balance should be there. 674 negative balance should be there. So what could be this balancing figure? Can you calculate that?
Oh, yes, sir.
What could be this negative balance?
407.
407 positive or negative?
Negative, sir. Because it will be negative.
Yes. So is there any option of 407 negative balance?
407 overdraft. Yes, sir. Negative balance.
Yes. Negative balance in our bank mean overdraft.
Overdraft.
Positive balance mean we are having cash at bank.
Yes, sir.
Is that fine?
Yes, sir.
Shall we move forward?
Yes, sir.
Now we are moving towards question number 3. Question number 3. Okay. What is question number 3? The following information has been extracted from the record of N. Petal. Bank account. Bank account. Bank account. 1st December balance brought forward 16,491. 2nd December the amount 6,962. Mean on the debit side of a bank account, this means these are withdrawals from Baker on 2nd December 1103, from Charlie on 10th December 2312, from Delta 419 327 529 119 on, and on the credit side these are balances. And then at 31st December balance carried forward is 19,973. This means this is a debit balance brought down as 19,973. And we are having a bank statement. This means this is bank account. Bank account means this is a cash book. This is cash book. And this is our bank statement, where they are saying at 1st December the balance was 17,478. What's the balance here at start? 16,491. While cash book is showing a different balance. What's the difference balance? What's the difference balance is 17,478. So it's showing 17,478, while the balance here is a 16,491. 16,491. This is the cash book balance. This is the passbook opening balance. So these two balances are different. And then on 2nd December, withdrawals of 426 and 737 both are relating to same date. What could be the total of these two? 1163, and the check number are 780 and 781. We need to check what are the entries there in cash book and passbook tally with each other. So 1163 has been withdrawn from the bank statement. Is there any amount here? 1163. Is there any amount here? 1163.
Oh, yes.
Where is 1163?
1160.
Where is 1163?
1160.
There is no amount of 1163.
Oh, yes. Yes, sir.
Please do not tally here. One thing. Okay, deposit of 176. Is there any amount of 176 deposit? No.
No, sir.
This is same relating to 2nd December. And then on 5th December, 857 withdrawal. 857 withdrawal. Yes, it's there. This means this tally. Then bank charges of 47 on 5th December. Bank charges of 47 on 5th December. These are not recorded in cash book. You know, on the credit side. So this is the difference amount. Then deposit 2065. 2065 deposit here. Deposit of 2065. 2065.
Oh, no, sir.
What's the date of 2065 deposit? It's 6th December. 2065. If you add both of these, is that 2065? Yes.
Oh,
So
yes, sir.
these two tally with this deposit of 2065. Then standing order 137 withdrawal on credit side. Is it there 137? No.
No, sir.
So this is the difference. Then 212 withdrawal 783. 212 783. Here 783 showing 221. The check number 783, but here 783 is showing 212. What's the difference? 9. The difference
Oh,
is
yes, sir.
9. You know?
Oh, yes, sir.
Then what? Deposit of 2312. Deposit of 2312. Yes, they are there. 2312 deposits are there. Then withdrawal of 511. Withdrawal of 511. Yes, it's there.
Yes, sir.
Withdrawal of 511. Yes, there. Then deposit of 419. 419 deposit. Yes, there. 419 deposit. Yes, there. 327 deposit. 327 deposit is
No,
there.
sir. Yes, sir.
327 deposit is here. 528 deposit. Here is a 529. But there is a 528. The difference of 1. And then withdrawal of 343. Withdrawal of 343 is there.
Yes, sir.
Withdrawal of 343 and withdrawal of 297. Withdrawal of 297 against. This is some different check.
Oh, yes, sir.
Don't know what. Because normally company check number 780, 81, 82, 83, 84, 86. This is a different check number. This might be some others person check has been deposited to our bank account. or withdrawal from our bank account. This is not our mistake. This could be the error of a bank. So in bank statement, we have identified what are the differences, these two differences, 1, 2, 3, 4, 5 differences. While in cash book, we have identified what could be the difference. For 129, there is 128. For 221, there is 212. And this rent has not, this 97 has not been recorded in passbook, and this 260 has not been recorded in passbook. What we need to do.
Yes, sir.
He says, prepare a bank reconciliation statement at 1st December. At start of the month, at 1st December, we need to prepare bank statement, bank reconciliation statement. So first we are moving towards part A. Bank reconciliation statement at 1st December. Bank reconciliation statement at 1st December. How we prepare bank reconciliation statement? Balance as per passbook. We add what? Benefit or loss? Loss, and we subtract benefits. And we arrive at balance as per cash book. Revised.
Yes, sir.
Balance as per cash book. What is the balance as per passbook? This is cash book. What is the balance as per passbook? It's 11,478 opening balance. 11,478. So 11,478. 11,478. We need to prepare bank reconciliation at 1st December. At 1st December. While cash book is showing balance, how much? 16,491. This is the balance cash book showing.
Yes, sir.
So balance as per cash book is 16,491, while balance as per passbook is 17,478. And these items relating to 2nd December, if we look at these items, 2nd December, these might be proceed before this month, but executed within 2 to 3 days, mean in next month. Like if we see this 1163 amount is not in cash book anywhere. 1163 amount is not in cash book anywhere.
Yes, sir.
Might be it's relating to previous month and had been withdrawn from the bank here. Either these are unpresented checks. These could be previous month unpresented checks that customer has, that other party has presented to the bank in this month. Mean these are unpresented checks of previous. That's why they are in the passbook. Mean they have been withdrawn from our bank account in this month, but these are not in the cash book of this month. So these might be relating to previous month unpresented checks. So if they are unpresented checks, either we need to deduct them or add them. Either we need to deduct them or add them. What we do with unpresented checks? Deduct or add?
So we deduct them.
We deduct them. How much is the amount of these two? 1163. So we will record 1163 as a negative figure here. There is one more balance in passbook 176 deposits. These could be customer has deposited into our bank account, or could be we deposit the check to the bank, but it was not cleared in previous month because bank normally take 2 to 5 days to clear the check of other bank. So this could be related to uncredited checks of previous month. And uncredited checks, what we do with them, we add them to the passbook. How much is the amount? 176. Now see if this balance tally. In these are the three items that are in passbook but not in the cash book. So we have identified like these are just relating to first 2 days of December. So this might be relating to previous month that have been cleared in December month. So like this, we have identified the balance. Like this 16,491 is the same of this 16,491. That's why we have assumed these are the entries relating to previous month that have been cleared in current month. These three. Is that fine? Part A has been completed.
Yes.
First December bank reconciliation statement we have done. Because at first December cash book is showing this balance while passbook is showing this balance. If this is a cash book balance, this means these three items are relating to previous month that have been adjusted in current month. Unpresented, uncredited checks. And these unpresented, uncredited checks are not our mistake, relating to not our mistake. That's why we have adjusted them into the passbook. Is that fine? So we
Yes, sir.
have done till here. This question we have done till here. Now we need to see the other differences. And for other differences, there is a requirement B, update the cash book for December. Now we need to update the cash book for December. For updating cash book, we need to record our mistake. So if we try to update cash book for December. So cash book we need to update for December. Cash book is showing credit balance of 9973. 9973. In a 9973, this is the balance. So this will be the balance brought down. How much? 19973. In this will come here. Now, what are the differences that we need to see? We have seen there was a check of 221. In bank, it is showing 212 has been debited, while in cash book it is written as 221. In bank, they always record the correct amount. If there is any amount difference between cash book and bank, we will assume bank has recorded the correct amount. The error is in cash book. Mean the payment, withdrawal mean payment, deposit mean receipt. The payment is of 212. We recorded in cash book of 221. This means we have recorded less or more in cash book.
It was off.
It was more. Means the correct amount is 212, but we have recorded in cash book payment as 221. This means by 9 we have recorded more. So what we need to do? we need to debit the cash book with 9 because it is our mistake. In the cash book, there is a mistake. So we will record
Yes.
9 here as a payment. How we have calculated this? 221 minus 212. Mean there is a payment recorded in bank that is of 212, and bank always record the correct amount. While against check 783, we have recorded in cash book 221. So which is wrong? Cash book is wrong.
Yes, sir.
We have recorded 9 more payment. So how we can rectify it is our mistake. We will record 9 on the debit side so that this more 9 will be compensated with debit 9. Is that fine?
Oh, yes, sir.
So this means this we have dealt with. Now, if we look at the passbook, so this has been done. What is this 47? Bank charges. This means it's recorded in passbook. We need to record in cash book. It's our mistake. So bank charges we need to record in cash book. How much? 47.
Okay.
So this 47 done. What is this 137? Standing order payment. This means this is not recorded in cash book. Standing order mean we request the bank to pay this phone company or internet company on our behalf every month 137. Bank has paid. This means this payment should be recorded in cash book. It's our mistake. It's not in cash book. So we will record here standing order with the how much amount? 137. So this is also done. So these 3 things done. Now look at 528. Deposit has been made to our bank 528 while we recorded here 529. One is the difference. Either bank is wrong or cash book is wrong. If there is difference of amount, either bank is wrong or cash book is wrong. Cash book is wrong. Always cash book is wrong. Bank always record correct amount. If there is any amount difference, bank always record correct amount. So deposit is of 528. We have recorded 529 in cash book. Whether we have recorded more or less.
How much have we recorded?
529 instead of 528.
So recorded more.
More. So what we need to do, we need to deduct by crediting it.
One.
How?
Yes, sir.
529 minus 528. You know. So this has been done. Now there is a check withdrawn from our bank with a different check number. Is that our mistake or bank mistake?
Sir, it's bank's mistake.
Bank mistake. So we will not adjust this in the cash book. This means cash book we have prepared. Mean whatever the entries are in bank statement are not in cash book. So we have adjust the cash book for those. So if we sum up the cash book, the balance will come here. This will be 2,891. So 19,982. What is the balancing figure here? 19,797. Balance
1979.
carry down. It will come here balance brought down 19,797. So we have done with requirement B. Now we are moving towards requirement C. Prepare a bank reconciliation statement at 31st December. We need to prepare bank reconciliation now. So bank reconciliation part C. Bank reconciliation statement. How we prepare, we record balance as per passbook and we add losses and we deduct benefits and we will arrive at revised balance as per cash book, and this should be the balance here. This, see how it appears. So what's the balance as per passbook? If we see passbook, what's the balance as per passbook? It's 19,738. You know, 19,738.
Oh, yes, sir.
So 19,738. Now look at the differences. Look at the differences. There is amount recorded in cash book on credit side 785.97. That is not in passbook. This 97 not in passbook. We circle me this not matching with passbook. What does that mean? We paid our party 97 check with this number. And if it is not in passbook, this means the check has not been presented into the bank. The check has not been presented to the bank. This is unpresented check. Is that our benefit or loss?
It's a benefit.
Benefit, this means we will record as a benefit 97 here. So that all the benefits should be deducted together from here. Is that fine?
Oh, yes, sir.
Might be there will be more benefits. So rent 260. We paid our rent through check 787,260, but that check has not been presented to the bank. Unpresented check again. So 260. Benefit means still check not presented to our bank. That's why it is not in the bank statement of current month. All done. And here 119. This means we received 119 from a customer. We received 119 from a customer. And it's not credited to our bank account. Mean it's on debit side of cash book, but not credited to the cash book. If it's not still credited to the cash book, means suppose we received a check from Fred, we recorded on debit side of cash book and we deposited the check to the bank, but still not cleared from other bank. So is that our benefit or loss? Is that our benefit or loss?
It's
uncleared check, uncredited check. Debit side on cash book, but not credit on passbook. Mean uncredited checks. Where uncredited? In passbook bank statement. Uncredited so is a loss. The money has not still came to our bank account. So it's a loss. 119. We will add it. So these things done. Now we need to see if there is anything that is in passbook but not in cash book. And here is 297. If it's on a debit side, withdrawal mean on a debit side. Is that mean this amount has been withdrawn from our account mistakenly by the bank? Is that our benefit or loss?
Amount.
This amount has been debited to our account. This means this amount we need to credit to our bank statement.
So it's a loss.
To adjust this, it's a loss. So loss should be added.
Yes, sir.
Loss should be added with how much amount? How much is the amount? 297.
Yes, 297, sir.
299 or 297. 297.
297, yes.
So 297 we need to record as a positive figure. What's the total of this 97 plus 260? 263, 60 minus 3, 357. Now see, is that the balance is the same as 19797?
19797. Oh, yes, sir.
Yes.
I think.
I think,
Yes, sir. Yes, sir.
yes,
It's
exact. This means we have done this question correctly. This is a bit difficult question. Try to solve it 2 times more after this class.
Yes, sir. This one only.
Yeah.
Okay.
If you are not understanding, try to cover it again from the recording. So this
yes.
chapter has been completed. Chapter 15 has been completed. Let's take a break. After break, we will start chapter 16.
Okay, sir.